So
Perfect.
good morning from Vancouver, and good afternoon or good evening wherever you are. My name is James Tansey. I'm the founder and CEO of Climate X Developments. We are a Canadian-based listed carbon project developer focused on nature-based solutions to climate change. So I'm going to give you a quick overview of the company and share with you some of the recent developments in the context of our technology platform, and hopefully leave lots of room at the end for questions. So I have about 15 minutes. Is that right, to present?
Actually, 30 minutes.
Oh, okay, great, good. Okay, so if you're new to the world of carbon credits, then let me just give you a quick summary of how the market works in terms of supply and demand. That's probably the simplest way to think about it. So we're now in a phase where companies around the world and governments, but I think increasingly companies are taking positions of corporate leadership on climate change, and making typically what we call net zero or carbon neutral commitments, or climate friendly commitments as companies. And when they make a net zero commitment, they either have to reduce their emissions to zero over time, which is very difficult for most companies to do, or their other alternative is they reduce where they can and then they purchase carbon credits for the balance of those emissions. What's changed in the last 5 years is that those commitments have gone from being really marketing efforts at the edges of what companies do to being very strong and core commitments, where regulators, SEC, the EU, exchange regulators, and what various regulatory watchdogs have said, if you're telling investors and shareholders that you're going carbon neutral, or net zero, you actually have to have a plan to support that. And so that's really changed the landscape for credits from being, a global market that was under $500 million to a market that was $2 billion this year. And because when you add up the scale of all of the net zero commitments, the scale of them suggests that market's going to be worth $30 billion by 2030. So a huge transition underway. On the supply side, there are lots of different ways of generating carbon credits. We had a great example from Dynasert in the previous presentation, where displacing traditional fossil fuels using carbon neutral hydrogen will generate carbon credits. I think that's a fantastic example of a project. There are anything from fuel efficient cook stoves to energy efficiency measures to installation of renewable energy on distributed systems. Those are all great technologies. We focus on what's called nature-based solutions on the supply side, and nature-based solutions are investments into nature's technology, I would argue. So nature, photosynthesis evolved hundreds of millions of years ago as a sort of one of the fundamental mechanisms of moving carbon around the atmosphere. Trees and mangroves and seagrass are all incredibly efficient at absorbing carbon from the atmosphere and storing it in sediments and biomass. So we think there's a huge opportunity to tap into that capacity and fund investments into the restoration of large forest areas and mangrove areas around the world, and the conservation of some of those areas to avoid emissions. And the key figure to remember here is globally, 20% of emissions today come from agricultural activity and from deforestation. We tend to forget that's such a massive driver of carbon dioxide emissions. In the history of the Industrial Revolution, about 380 billion tons of carbon have been released from fossil fuels. About 180 billion tons have been released from deforestation and degradation. So we think focusing on nature-based solutions is a large and important part of the solution. And the story of our company has been taking an industry which was really a small-scale cottage industry and working out how to do it at scale and build a strong track record. And then also to think not like an NGO or an environmental company, but like a resource sector company, about contract structures that provide very scalable pre-purchase agreements and offtake agreements with large final buyers. And so one of our first customers was BP Carbon Trading, and I'll share with you a little bit more about that agreement. Our company's built around expertise in both the resource sector and carbon markets. I'm a PhD in environmental sciences, and I've been working in this sector for over 20 years. I made the Winter Olympics carbon neutral in Vancouver. We made the province of British Columbia carbon neutral. We worked on some of the largest projects in the world and developed over 50 million tons of credits from conservation and restoration projects. In the face of that growth in demand, we now see about 4,000 net zero companies around the world that represent 33% of global market capitalization. And that's where our demand is coming from. To date, we've developed and identified projects with around 43 million tons of credits in over their lifespan in 4 jurisdictions. You know, we believe our pricing scenarios suggest they could be worth $2 billion over the lifespan of the projects, and we have at the project level IRRs that range from 15 to 90%. And that just depends on the project type, as you'll see later. So we believe we have a very strong foundation here, and we were listed just over 2 years ago. We started the company just over 2 years ago. We listed 18 months ago. And the very strong focus for us was not just developing these projects, but finding large buyers as quickly as possible. So we have an announced pre-purchase agreement in place with BP Carbon Trading. The model for this one is a model that will take to scale in West Africa. So the pre-purchase agreement is we invested about $2 million in the initial site preparation and development work. BP has invested $2.5 million to reforest the remaining 5,000 hectare site. And we pay them back in tons. So there's no cost to that capital, and we're able to sell those tons at $15 a ton back over to BP. So a very good price in this market if you've been following carbon prices at all. And so we're very happy with what that means for the business. BP then has the right to purchase the balance of the tons at market prices, so an index-linked market price. So we get market exposure. And then they have a right of first offer on the remaining 20,000 hectares within that project site and potential to expand that to 57,000 hectares of land. So the efficiency of this model is we're using the customer's money to develop the project. And it's not unusual in oil and gas to see that happen, but this was a very robust agreement that we put in place. Let me just keep moving ahead. Our executive team, myself as founder, serial entrepreneur in Canada, working in clean technology, carbon markets, companies like Gemini Labs as well, which undertake research in diagnostics and develop new human diagnostic tools, but principally working in clean technology and carbon. Kev Godlington, former British Army, former British Foreign Office, was involved in stabilizing Sierra Leone and spent 20 years in the country building very strong relationships with the paramount chiefs and with the national government. And then Neil Passmore, also CEO of Hannam & Partners, Director of Finance for the company, highly experienced in Latin America, but also in investment banking in the UK. So we had a very, very strong founding team of the company. This slide just shows that statistic around the 33% of market capitalization involved in net zero commitments, and you can see on the right-hand side here some of the companies that have made those commitments. So we've had discussions with Total, with BP, with Shell, indirectly with Apple through their Restore Fund, HSBC. All of these companies are concerned about their ability to meet their net zero commitments. And you would expect normally they would just be buying on the open market. Increasingly, most of these companies now have groups in-house that are going upstream and developing these project pipelines in advance and getting involved in the very early stages of those projects in order to secure development rights. And so we've seen that across the board. I mean, BP's team just on the low carbon file for these projects is 15 or 20 people. So very, very active engagement with these projects and really pushing upstream because they're nervous about the lack of supply. And that's really what we've been built to solve. So the problem when I started the company 2 years ago was we could see there was potential for 8 to 12 billion tons of credits from carbon credit markets and from production. Globally, we need to reduce our emissions by 23 billion tons to stabilize temperatures across the planet. So you've got almost 50% of the potential that could come from carbon credits, and this has been validated by lots of sources, but the market is supply constrained because historically the carbon project developers have worked on a very small scale. I compare this to, you know, the gold rush in the Yukon in the 1860s, where everybody ran around with gold pans looking for nuggets in streams, compared to a modern industrial scale gold extraction company and gold mining company. And you know, so what we've done is take that core cottage industry model and figure out how to do it at scale. And the big parts of that are, as you'll see from the next slide, you know, focus on nature-based solutions because they're low cost and very scalable projects. You know, we have projects that will produce 15 to 20 million tons over their lifespan from 50,000 hectares. And the cost base is below $20 a ton. We target low cost tropical jurisdictions, and we do that because the trees grow up to 3 times faster in the tropics than they do in the north. And I've done lots of projects in Canada and even northern parts of the US, and the growth rates are just so much larger, so much faster. And then we also have lower labor costs and lower land costs. But the difference here is we go in and we negotiate with the government or with private landowners in advance, effectively a concession on the land for 30 years, the rights to develop that land through to completion. And that scalability gives us access to a much larger volume of credits than you might see in other projects. That's kind of key to our model. So we think about working on an industrial scale at jurisdictional levels. And we're working, as you'll see, across Sierra Leone. We're working now in Liberia, Ghana. We're also in the state of Yucatan in Mexico, Guyana, and Suriname. Just useful to think about some of the precedent transactions, because these are private market transactions, and this is what we've modeled our deal flow on. So in Pakistan, Delta Blue Carbon, we have a project that our technical team was involved in establishing. And it's 140 million tons of carbon credits over a 60-year project lifespan. Sale of 50,000 tons in June of 2023 at $30 a ton, and forward pricing on that project at closer to $50 a ton. So hard to get visibility into those, but this is what we're modeling our transactions around. Wildlife Works, 20 projects around the world with a $200 million credit line from Hartree Solutions. So these are all private companies. Klimat is really the only company that offers public market investors exposure to these same kinds of opportunities and the same kind of growth. We're really the only large scale company still operating within the market as an owner operator. The other piece of the story that we've announced and that we'll be saying a lot more about in the next few weeks is a carbon quantification system that we're layering on top of all of our projects. So there's been concern about transparency with respect to pricing in the markets and quality control within the markets. We didn't feel like the quality control we get from groups like Verra was sufficient. Verra is the third-party registry that manages verification. They're very good. We've been very happy with them. But Verra, when you produce a project, will look back at the previous year and say, this is how many tons your project sequestered. So if you're a buyer of those credits, from one report to the next, you're waiting at least 12 months to find out how your project is doing. And Verra aggregates the tons up to a single statement. And we believe that buyers want to have much more visibility and transparency into where the carbon is being sequestered. So, at the base of the company, the base of Klimat, we've got world-class forestry restoration and conservation teams that have already planted 1,500 hectares in Sierra Leone of mangroves and forests. Layered on top of that is a technology called Tree Counter, which we've licensed partly from University of Copenhagen and then are developing in-house. Tree Counter maps every single tree that we plant, scans it regularly with drone flights, and then as the trees grow, we're able to monitor tree growth from space. And what we're able to see is the rate of growth almost on a daily basis of those trees. On top of that, we layer a carbon done right standard, which relates to fairness and transparency for the smallholders or the landholders. So you can see exactly what support they're getting and what they're receiving in return for this. And ultimately, if you're a buyer of the credits in this system, you'll be able to click on the ton that you're purchasing and actually see it traced back to the individual landholder contract. So unprecedented levels of transparency with respect to these restoration and conservation projects. And then the last technology which we're acquiring is called London Carbon Exchange. And we'll be able to say more about that soon, but it gives us the ability to offer regulated instruments that allow people to invest early in the real estate associated with these carbon projects, because there's real leases and transactions there, and it's a fractional ownership model built on a very robust blockchain platform, not a cryptocurrency directly, but using blockchain to trace land rights through the system. So very exciting new development in terms of the technology that we're layering on top of what's already a validated and accepted approach to projects. Our jurisdictional approach, we have agreements in place with the government of the state of Yucatan to do 40,000 hectares of mangrove restoration. We have an agreement in Guyana with the President's office in Guyana to develop a project there around mangrove restoration. And we have a coconut plantation there as well that ties into our carbon credit production. In Suriname, we have a national level agreement signed by the President's office to develop credits. And then in Sierra Leone, we work with the national government. We help them represent their representation in the COP conference last year. And we have, we believe, line of sight to at least 100,000 hectares of restoration within that country. Project strategy and criteria, we want at least 20,000 hectares of land. We do reforestation, conservation, and blue carbon projects, and we focus on tropical and subtropical regions. Just to give you a sense of the economics, no, this is the best case scenario for us in terms of the economics, because it's a conservation project. But in simple terms, we have at-risk exploration, site development, and quantification of reserves. We can do all of that work for about $1 million, maybe $1.5 million. But that scoping work is something we're very good at, and we spent lots of time working on. For a conservation project where you're paying people not to cut down the mangrove areas, you're purchasing the rights to that land, you get a big bump of tons in the beginning of the project. That might be between 400 and 600 tons per hectare. So for an expenditure of $1 million, within the first 2 to 3 years, you could realize from the 3,000 hectares that we're working on, $24 to $36 million of revenue. And then you have a long tail of for out to 30 years for the ongoing 5 to 7 tons per year that mangrove area will sequester from the atmosphere. So you end up with a revenue profile for conservation projects that looks like this. So the volume of tons on the vertical axis over time, a big bump in tons at the beginning, and then it tails off to a stable ecosystem, which produces 5 to 7 tons per hectare. For our restoration projects, it's more an S-curve. So in the early years, you get very little carbon. But after 4 or 5 years, our trees that we planted 2 years ago are already 4 meters high in Sierra Leone. So you start to get rapid acceleration of sequestration, and you're then capturing 12 to 15 tons per hectare per year from that project. And that will continue out for 50 to 80 years, depending on the project type. Just a very quick overview. We have 3 projects in Sierra Leone on the restoration side, so forestry and mangrove restoration. We have a mangrove conservation project in Sierra Leone. We have now up to 40,000 hectares of mangroves in the Yucatan, working with the federal and the state government. And we have Suriname mangroves as well, probably closer to 30,000 hectares of land there. Very cautious with how we present financial scenarios or modeling scenarios on this. These aren't revenue projections. These are scenarios making assumptions about what the revenues would look like if we secure $30 a ton, which is what we think the average price is moving towards, and we've got lots of evidence to support that. The key thing here in terms of the project life forecasting is, because we're very efficient with capital and we use the buyer's capital to develop the projects, our ratio of total value to paid in capital at the company level is 25x. So in the Sierra Leone mangrove project, restoration project, we've spent $2 million on the project. BP is paying the remaining $2.5 million. That project will generate $110 million of revenue over the lifespan, assuming, $15 starting price and about 2% increase in prices each year. So very, very efficient use of capital. And then these last slides, and I'm very happy to share this deck with this group as well, just shows the breakdown for each individual project. The reason we get a 93% project IRR in our models on this is there's no capital expenditure on mangrove restoration. You're really just securing the land rights and paying community benefits and government concessions, but you're not having to do large amounts of tree planting, so the cumulative benefits are very large. The restoration projects, this is the one that's underway. We've planted 1,500 hectares already, a project IRR of 16%, very high visibility project in a very poor part of the world, and about 500,000 tons of credits per year. We have a further area of 32,000 hectares within the region that we'll be developing too. We have a mangrove restoration project that should generate 2 million tons over 5,000 hectares. And we've planted 15 hectares of that area already. In Yucatan, we have 100,000 hectares of land for conservation and restoration, 40,000 hectares for restoration. And we've just announced a joint venture agreement with Imperative to develop that project. And then in Guyana, we have a fully functioning operating carbon and coconut water production facility, fully planted out and increasing yield on a year-to-year basis very quickly. And then in Suriname, 25,000 hectares of mangrove that's highly degraded and is producing methane, which we think we can restore and rebalance over 3 to 5 years in an agreement with the president of the government of Suriname. So I'll stop there and leave some time for questions. Happy to share more materials afterwards. And we have lots of materials on our website as well, lots of graphics and videos explaining how we operate.
Okay, excellent. Thank you very much. So the first question in the chat is, can you explain how London Carbon Exchange creates revenue for your company?
Yeah, it's the underlying model when we develop projects is we acquire rights to land, and we acquire them from private landowners and smallholders. And so by effectively creating a fractional ownership model and tokenizing those land rights, investors can get direct participation in the land acquisition and a future stream of revenues associated with the carbon rights for that project in a fungible token. So it allows us to accelerate the early investment into land rights there, and then it creates a vehicle where there can be sales of those rights against expectations around future carbon prices. So it's a way of tokenizing. It's not a cryptocurrency in the sense in which you're trading just the blockchain itself. The blockchain just enables ownership in an underlying real asset. And so you're trading those rights. And that's something that we expect to have in place by Q3 of this year and fully functional.
And regarding your latest project with Imperative Global, how do Klimat X and Imperative Global projects complement each other's expertise in the Yukon Mangrove Restoration Project? And what are the specific roles and responsibilities?
That's a great question. So we laid out some of the roles and responsibilities in the press release. Imperative has the reason, so it's a 50-50 joint venture, equal board members, 2 appointments of each group on the board. We have very good foundations in Yucatan in terms of government relations, in terms of securing land rights, securing consent from communities, understanding the legal structure and framework between the federal and state government, and then also in developing the project design document that reflects kind of local understanding of how these mangroves actually work. and we built a very strong foundation within that. The key value that Imperative brings is to develop this project, we need some significant engineering interventions. So we have to restore the tidal flows into these mangrove areas by building bridges and culverts. Imperative has a very strong in-house engineering team. This project's a little bit different from our other projects, which are primarily, just planting and restoration. In this case, we needed a strong engineering foundation, and they have that in-house. They've raised capital to deliver on these types of projects and to be operators of projects. So for us, it made sense to bring in a partner, a 50-50 joint venture partner to share in that expertise. And so they lead on the project implementation on the engineering side. And then we also lead on where there's tree planting and restoration in the area on that. So there's some joint responsibilities, but their distinct responsibilities around that hydrological engineering.
Yeah, maybe to add to this, so what are the key challenges that this project is facing, and especially regarding hydrological restoration and replanting efforts?
The biggest challenge actually with this project was clarifying land title between the federal and the state government. So by law in Mexico, all mangrove areas are under federal jurisdiction, but the federal government invests very little money in protecting those areas, which is part of the reason they've been so heavily degraded. So we had to spend about 8 months working through with constitutional lawyers, coming to an agreement between the federal government and the state government to enable that concession to be transferred down to the state level. And nobody's done that before, and we've worked out the legal precedents for it. In terms of the challenges of restoration within this area, there have been small-scale attempts to replant by just basically reducing salinity through freshwater dikes that flood the areas. And they've been very successful. So we know it works on a small scale. We know that building culverts and bridges is pretty well understood. It's not complex civil engineering. And then the other benefit, this is a very, very low-lying and very, very flat area. So once the tidal flows are reintroduced, it'll establish the tidal areas that used to be in place. So that's not complex. Tying it all together, we think is going to take some work, and scaling up the reforestation and replanting work is also going to require production at scale, but it's already worked on a pilot level. So we believe that if you get nursery capacity in place, we should be able to do it on a much larger scale.
Okay, and another question from the chat is, how great is the risk in terms of political stability in the countries you're involved in? After all, we are talking about a very long period of time in which something can happen.
Yeah, so I mean, all of the places where you can do nature-based solutions are in tropical regions, and they tend to be countries with higher political risk. It's just built into the geopolitics of carbon credits. The way that we deal with that is, our rights in Sierra Leone, our land rights with smallholders are constitutionally protected. We're paying very fair and equitable lease rates on the land. We make sure the government is a significant beneficiary of it. And the reality is, compared to, let's say, an oil facility or a mine, whether you have real nationalization risk, you don't really have that in the case of these projects. You've got firm land rights, but your buyers of these credits are large corporates who simply won't buy directly from a government that takes over a facility. So by making sure the government has a strong financial interest in the success of the project, and in paying more than they would ever receive from any forestry operations, which is also part of the economics of these projects, we try and create long-term alignment with a commercial interest. We obviously have very strong legal agreements as well. The risk is governments can choose to ignore those. So the best insurance is making sure the government itself is a major beneficiary of these activities on the reforestation side. And that was the structure we put in place in the Congo in a project that I set up in 2012. That project's sold over $160 million of credits, and the government's happy because it's far more money than they'd have ever made from forestry. So that's probably the best insurance policy. And then we're diversified across jurisdictions and diversified across projects within jurisdictions. So we try and manage risk that way as well.
Okay. James, thank you very much. The time is
Thank you.
already up.